What's going on, guys? My name is D. Anthony, and in this video we are going to be discussing a problem that I think hinders a lot of traders from becoming successful, taking payouts, and putting cash in their pocket. And I've been doing some thinking over the weekend, and I've come to the realization that this problem is affecting a lot more traders than we probably all think, right? That one problem is very, very simple. I'm going to break it down in a couple of different kind of concepts. But the overall, the nitty gritty of it, just to get straight to the point, is you want to be right. Okay. Now, does that mean that you want to be right on every trade? No, but you want to be right in the way you think you are analyzing the markets. Okay. Think about that for a second. You want to be right in the way you think is the correct way to trade. Okay. You want to be right when you do your homework, you find the picture perfect setup, it does not work, and it's now going against you. You want to be right. This problem plagues a lot of traders, and I've been doing this. I've been in the business for 9 years. It still is a problem to me, but at least I have identified that it's a problem. I've identified how to manage it and how to work with it, and I don't let it affect me, and I don't let it affect my P&L. See, the problem is that whichever way you learn to trade, maybe you started off trading one specific way and you've learned a new style, a new process, a new way to trade, a new system, and now you believe that that's the only way to trade. Let's say, for example, you're not a believer in technical analysis and you're more of a fundamental trader based on news and numbers and all of this stuff. Maybe you don't believe in moving averages. Maybe you don't believe in all the squiggly lines that I put on my chart. Maybe you don't believe in trend lines. Maybe you are a pattern trader looking for head and shoulders, cup and handle. Maybe you are a breakout trader or a breakdown trader. Maybe you like nothing but a bear chart and you like to just trade pure price action by reading order flow. What I'm here to tell you is that there's no correct way to actually trade. Each one of these ways, whether it's moving averages, technical analysis, some type of technical pattern, reading the order flow, reading the book, reading where the liquidity's at, having a bare naked chart, pure price action, candlesticks, no candlesticks, Hakanashi, whatever Nashi, it doesn't really matter. Each different way is going to provide some sort of edge, okay? Whether you believe that or not is another story for another debate. Because quite frankly, I know people who trade a completely 360 different way than I trade, and they look for things completely different than me, and they still make money. So is that to say that the way that I trade or the way I view the markets is wrong? Of course not. Is that to say that the way they read the markets is the best way? Of course not. But a lot of times traders will have one particular strategy in their head or a certain type of way to trade inside their heads, and they will believe that that's the end all be all. So if they're not making money using that one specific strategy, they tend to go on this hamster wheel of trying to search for what else works, when in reality, it's not necessarily that the strategy is faulting you, but it's the way that you're executing on that strategy. You see, so a lot of times traders will start off taking trades and maybe they have a little bit of success, maybe they make a little bit of money, and then they have a bad day or a bad week or a bad trade. And all of a sudden, they don't know what to do. All of a sudden, they start seeking some other type of answer. All of a sudden, emotions come into play and they start oversizing, now trying to get back the losses that they just incurred, and they're trying to get back and scratch and crawl their way back to break even. But how many trades have you actually taken where you've journaled, you've followed a process, you've stuck to your rules, you've understood what your account size is and what your available risk tolerance is on that account size? And how many trades have you done where you've actually implemented everything that you want to do in the markets? A lot of times traders can look back at their own personal performance, because remember, your performance is going to be different than mine. My performance is going to be different than someone else's. The trades that I take, maybe I see are clear because I'm looking for one specific thing. But if you are not looking for that, let's say one specific thing that I may be looking for, or the next trader may be looking for, Maybe it seems foreign. It seems like it doesn't make sense. It seems like it's impossible to make money that way. How can something be so simple? How can, something be so complex, right? You start to overanalyze all of these things and you try to find reasons why to justify that something's not working, or you're just overanalyzing everything altogether. Guys, let me give you a little bit of a tip. It doesn't matter how you trade, what strategy you're using, what is on your charts, whether you have nothing on your charts at all, or whether you have a million things on your charts. It does not matter. What matters is, what is your risk? How well are you managing whatever edge or however way you're trading? How well do you manage it? You're going to see a lot of times, 9 out of 10 times, 8 out of 10 times, it's not the market, it's not the strategy, it's not anything else other than you were either impatient and you took a trade you shouldn't have taken. You were greedy and you traded too much size for the account balance that you have. You over traded. You traded through news. You thought you had some inside information that, the market is overextended. It's got to pull back today. And you're using your own little instincts to kind of justify why you're taking trades. But what you're really doing is deviating from the whole entire process. If you have a process and you have not back tested, meaning taken actual trades, at least 50 of them, at least 100 trades where you follow everything in line, you, my friend, cannot even begin to make an adjustment and or change or edit your strategy and your current process. A lot of times traders will take 3 or 4 or 5 trades. Maybe they win one, they lose one, they scratch one, they lose a little bit, they make some money, and then all of a sudden it's a bad market day, emotions get involved, and you lose everything that you did for the week. So now you're looking at the whole entire system and the whole entire process, and now you've deviated and gotten outside of your process, and you're doing things that you're not supposed to do. And then you come to the end of the month, the end of 2 months, 3 months, and you sit here and you say, what I'm doing is not working. I need to go find someone else to learn from. I need to learn how to read order flow. I need to take everything off my charts and go to a bare naked chart. I need to put things on my chart so I can see different levels. When in fact, the way that you were trading necessarily didn't mean to be a bad way or the wrong way to trade. It's just you didn't even give yourself enough time to see what mistakes that you were actually making as a trader so that you can fix them. Okay, so a lot of traders want to be so right in their thought process, so right in the amount of hours that they're putting on the screens. I get it, guys. I'm in the same boat. I've been there. I've felt it. We feel as traders, however long you've been trading, whether you just started trading this year or you've been trading for the last 10 years, we feel that we put in so much time. We try so hard to be right. We try so hard not to lose money, and things still don't go right. But realistically, it's not the fact that things are not going right. It's more so a fact that you don't want to be wrong. So you're more so fixated on the P&L and the number at the end of the trade or the end of the day, and being right on what all of this hours and time and effort that you're spending, that you don't want to be wrong. So when you don't want to be wrong, what happens is you tend to be a little bit more emotional when it comes to the way that you trade, and it comes to the trades that you did take and the trades that won, the trades that lose. You are so emotional. It's like a sports fan who loves and bleeds and dies that particular sports team. They don't want to hear anything else from anyone else, when in all reality, each player in each team is also a professional as well. So if you think about it, yes, maybe some teams are a little bit better than the others. Maybe some teams have some things to work on, but it's still, if you or me or the next guy wants to get out onto the football field on Sundays, I don't think that we're going to be able to go out there and perform at the same level as the worst player on a starting roster in the NFL. Does that make sense? So does it mean that those players are no good? Of course not, because they're still at a higher level than someone else. So it's the same way with strategy, in the same way that you read the market. It doesn't mean that there's a right or wrong way to trade the market. What it means is how well are you actually implementing and executing on your strategy. So if we go back to the analogy with the professional sports team, sometimes sports teams need to let go of the head coach or the offensive coordinator or the defensive coordinator because the team is not really gelling or vibing or understanding the particular concept or the form of, or the type of offense that they're running. So sometimes you need to bring in something new to be able to adapt with the talent that you have. So sometimes a particular way that you may see everyone else trading maybe doesn't necessarily work for you because something inside here or something inside here doesn't really fit that. Maybe you're looking at a 15-second, 30-second, 1-minute time frame, and you're really not built emotionally to handle the fast pace and volatility of a chart that moves that fast. So maybe backing off to a 2-minute, a 5-minute, a 15-minute chart might actually better suit you by just sizing down on your position instead of trying to trade max size and be in 100 trades every time you get some particular setup here and some particular setup there. I hope this is starting to make a little bit of sense to you, but this is a big problem of traders wanting to be right in the way that they think is the correct way to trade or how they felt they've been spending a lot of time. So listen, when you spend a lot of time learning, trading, and doing something a certain way, you feel emotionally invested into that. It's just like a bad relationship. Why do couples stay in a bad relationship for years and years and years instead of going their own way? Because they've built this level of comfort. Even though it's not working, even though they need to learn something new or be by themselves or experience something new, they are used to the comfortability. But in trading, that comfortability, although it brings you stress, it's comfort to you. It's like going back home and eating mom's cooking. It feels okay because it's comfortable. And sometimes you don't want to step outside the box and allow yourself just to let go. In the moment you allow yourselves to let go and see the market in every different way, I don't shame any type of strategy out there if it's working for you and if it's your personality style. The way I trade is not the end all be all. It may be too simple for some of you guys. It may be too complex for some of you guys. It may be stupid to you, but the way that I do it works for me. And I'm passing along the information to you and other traders that are inside Evolution Traders that maybe if it does fit your personality and your trading style and your risk management, then maybe you can use it to be profitable as well. Guys, if you enjoyed this video, make sure to like, comment, and subscribe, and I'll catch all of you guys on the next one. I wish you guys the most success this upcoming week in trading, and I wish if you guys are not coming back to the markets, a happy holidays, and I'll see all of you guys later.